All right, so we're here with Irfan over at Horizon, and we have not spoken for I think 5 or 6 months or something like this now. We did chat with Sandstorm in the interim, and of course you have some overlapping assets and overlapping interests generally. But we'll go through everything again for you guys, of course, now from your point of view. First and foremost, you did what you said. You have actually secured your revolving credit facility, and it's a substantial one for your size, of course. So maybe you can just refresh the terms there for people, clarify what that means for you, and kind of set the stage what your current financial position looks like.
Yeah, Gorm, good chatting with you again, and thanks for taking the time. I would say that I always find it funny when people go, "You did what you said," which shouldn't be surprising in the industry, but sometimes it is.
Unfortunately,
Yeah,
yeah.
yeah, earlier, I think when we spoke, we discussed the fact that we were looking to provide a revolving credit facility. I think some people look at that and they go, "Oh, is that private equity debt? Do you have esoteric terms?" And the answer is we had a couple large Canadian banks, chartered Canadian banks, some of the largest in Canada, provide us with a revolving credit facility. That facility is $30 million US, and then we have an accordion feature for another 20 million US, so total 50 million. Now, the questions come, what are they used for? What are its needs? And what are the terms as you asked? The terms are pretty standard, traditionally what you'd expect with a revolving credit facility. You know, the interest rates are SOFR plus a couple percentage points, depending on your leverage ratio. One of the key features of that revolving credit facility excludes any of the debt that we have with our strategic partner Sandstorm, which then makes it more plausible for us to be able to actually draw on it and use it for a variety of purposes. And the purpose of that facility are very simple. They are to meet our capex requirements under Hod Maden, as we'd indicated before, and also allow us flexibility to acquire assets if we so choose, and if something comes available, we're able to execute it on. And for me, it was very important that we didn't have a story a story where people look at the company and go, well, I like them, but I know they're going to have to raise tons of equity to move their portfolio forward. And for me, that helps alleviate people's concerns about your traditional junior copper company that has to always issue shares and equity to move their portfolio forward. And right now, we have two assets where you don't have to have any cash infusions, and our third one, Hod Maden, now we provide that financing capacity so we can draw on it as we need when we need it.
Yes, exactly. So beyond the revolving credit facility, can you just remind everyone what the otherwise financial position is? What's the cash on hand? Are there any? I mean, the Sandstorm stuff that's fine, but what are there any other liabilities on the balance sheet as of now?
Yeah, our liabilities are just related to the Sandstorm transaction, being the stream and our royalties that we help finance the acquisition and long-term debt. In terms of cash and what we have on our balance sheet, you know, we try to target around 10 to 15 million US on our balance sheet in cash at all times. That's what we have currently, and we'll maintain that going forward. So well capitalized, I think. Our G&A is quite low. It's about a million and a half US a year. So we try to keep a pretty lean ship. And all our capital that we're using for the time being from Antamina, our most material asset that's cash flowing today, we're just paying back debt and reducing that debt that exists. So equity holders own more of the company as time goes by and more of the enterprise value.
So sort of a bit of a refresh. Last we spoke, we of course were expecting Hod Maden to move into a financing stage around this time. Now that hasn't turned out to be the case due to unfortunate events, as we've covered. People know about this. It shook the industry briefly there with the tailings dam disaster over at Kepler. But could you outline how this has affected Horizon? Maybe you can outline because it's not, to my understanding, it's not clear exactly what's going to happen. So maybe you can outline the various permutations as you see it for outcomes of what's going to happen with Hod Maden as a consequence of this unfortunate event.
Yeah, I think the last time we spoke, SSR Mining was coming out with a press release. They did end up press releasing the fact that, you know, they're moving Hod Maden forward. They're expecting a final investment decision, and everything was going pretty smoothly, and they were pursuing project financing. And then they had an incident happen on one of their other assets, completely unrelated to Hod Maden and our interest and our asset. But as a result, it caused a lot of their attention being driven towards remediating that asset and making sure that they're able to, resolve the issues surrounding that incident. Hod Maden is in a different part of the country, different owners, different permits. The forestry permit, the EIA was put in place before SSR got even involved. And so the knock-on effect is, okay, how are those two projects similar? That incident happened at a mine that has heap leach and cyanide. Both those things aren't relevant to Hod Maden. Hod Maden is a very simple mine. It doesn't have a heap leach. It doesn't use cyanide. It doesn't have any of those nuances associated with it. So it's very simple. So then the next question becomes, okay, they're not similar. You've got different shareholders, no kind of crossover in terms of the actual actual permits and stuff, the separate entities. But you've got SSR Mining, which is the actual operator of that asset and is going to be the operative of Hod Maden. So how does their kind of incident impact the timelines to actually going into production, their social license, and moving the Hod Maden asset forward? So those questions have to be resolved. And SSR Mining is looking forward to restarting some of their operations at the Tripler mine, as they publicly stated. That, I imagine, will take time. They've indicated they need to work on the remediation and also all these other kind of components which they're working on. The way I look at it is, they'd indicated commercial production in 2027. I think it's reasonable to assume there's going to be a year's delay in that. And so when I look at now, and when it's actually going to go into construction, I think it's fair to say that there's about a year's delay. And so in terms of our immediate cash needs, we don't necessarily need to, fund our obligations as quickly as we anticipated. But we anticipate that ramping up over the course of the next year or so as they, move forward with a lot of the kind of early construction work activities. And so in terms of timelines, it's being our expectation pushed out to 2028 commercial production as opposed to 2027. And candidly, while that's disappointing in terms of delaying that timeline, with commodity prices moving considerably, it actually benefits, I think, our shareholders over the long run, because you're able to realize on the higher commodity prices they come as opposed to mining it out a little bit earlier. So that's how we look at it.
So it sounds like you very much discount the possibility of the asset potentially switching hands or any such alternative paths. Is that something that you could see happening still, or do you really think it's going to be SSR that's going to build this? It's just going to be a delay?
I think SSR is indicating that they want to build it. We're certainly giving them time to resolve some of their issues and such as they move forward. But the way I look at it is, regardless of if it's SSR operating or someone else, that project's going to get built because it's such a quality world-class asset. And it's a question of more timing as opposed to if, in my opinion, of that project moving forward.
So if we just look at SSR's position, I think I haven't looked at the precise numbers, but I think they sort of stabilized their cost structure in Q2. They're able to stabilize it, bring down costs, and sort of be net cash generative, at least on the existing assets. And I think they had like a negative 100 million net debt or something like that. So with this in mind, and the capex for Hod Maden all in, as we last discussed, would be 100 million in equity, say 350 million total financing package to get it built.
I would say
do you feel like that's reasonable for them to take on still?
Yeah, they were in the fortunate position where they had hundreds and hundreds of millions of dollars on their balance sheet. And so that was fortunate for them to be in that position. But I think more than anything else, I think as we're seeing in the industry, CapEx is increasing on projects over time. Like you can see in the last year, a number of projects, inflation has kicked in, CapEx overruns have happened. And so when we did the feasibility study, a few years ago, where the feasibility study came out, the CapEx on it was 300 million. So who knows if that new capex number based on like 50 to 80% inflation that's happening across the industry is 400 or 500 or 600. We'll find out over the course of the year of what that is. But what's important to understand is project financing and the fact that SSR is pursuing project financing. So if you look at your traditional project financing, 70% debt, 30% equity. If you just you can pick any of those numbers that I mentioned. Let's just pick 500 million, 550 million as an example. 70% of that being debt finance results in 30% equity check. We own 30% of that 30% equity contribution. So you multiply the two, that 500 or so times 30% times another 30%, that comes out to about $45 million US. You look at our cash on our balance sheet today, you can look at our revolving credit facility, and I think we can demonstrate to the market, look, even if there's capex overrun, even if inflation's higher, we still have that capital available, assuming project financing, to move it forward.
I think yes, I do agree with that. But what if the perception or the debtors would, it would be reasonable maybe that they are a lot more skeptical to SSR coming asking for a financing package after the incident at Kepler. So maybe the equity portion increases to 40%. And if you have a capex overrun at the same time, or overrun, just adjustment to reality, inflationary reality, then maybe it could become 50, 60 million for Horizon. And still, it can be done, obviously. You still have the finance, but then it becomes very tight. Is that something you could see?
I think the mining industry is notorious for underestimating costs, risks associated with capex, etc. That's why we built a story where we've assumed that's going to happen. Could it go beyond that? It's possible. I wouldn't consider that the base case, candidly, in our estimation. But if it did, let's say you had to do another, 10 million or so of additional amounts. We have that revolving credit facility available with Sandstorm that we could draw on in order to meet that gap and that delta. But for the time being, based on the projection that I mentioned to you, we have enough cash on our balance sheet and the revolving credit facility with our two Canadian chartered banks to meet those obligations.
Right. So I was thinking previously that this delay might give you the opportunity to tuck in another asset, tuck in something else. Maybe not something very huge, but it might give you the room to get something new into the portfolio. Is that realistic, or do you want to actually get clarity first from SSR about their expected new cost and the expected new timeline before you would try to do something like that?
Yeah, I would assume that they would put out a technical report in the next year or so, and a construction decision on that in time frame. So we'll get more clarity as they do their work and they put out their various reports and such. I would say that we were in the data room. We looked at some assets. We came across some assets that looked promising, that we're looking at tucking in. But then once we did further due diligence, we noticed issues with like years 4 and 5 of their mine plan that the market may not be seeing in that asset, and we decided to walk away from it. So our technical due diligence is very stringent, in my opinion, and the quality of the work that we're doing is hopefully ensuring that any assets that we add to the portfolio are of an adequate caliber to help increase the diversification and also exposure to copper. So the short answer is I don't see any transaction closing in the next few months. However, we're still looking for good assets of ways we can tuck it in, and I'm hopeful to add another asset over the next couple of years.
Right. So just to clarify, the expectation now is essentially that the technical report, which we expected to be here by now, obviously, followed by an imminent financing, that is sort of a year out. That's going to happen about the latest this time next year. That's your expectation, right?
My expectation is they had indicated commercial production 2027. A year delayed to all those timeframes would make sense to me. So I would assume.
Would you, in that assumption, are you assuming that they will restart Kepler first, and then they will get to Hod Maden, or do you think Hod Maden will be done in parallel to a restart, or what's the actual? How does the chessboard look like from SSR?
I think people don't realize Hod Maden is still happening in the background. So there's actual cash calls still required. They're moving that project forward. It's just not becoming elevated in the same sense. So it isn't a project that's on standstill and care and maintenance right now. There's still stuff happening in the background. I would say that I don't see a sequencing of time issue with Chirpler and Hod Maden. I don't anticipate that right now, where there's work that needs to be completed that's happening in the background, and I imagine that'll continue over the course of next year on early works construction, a decision towards sometime in the next year.
Okay, and well, so another potential large liquidity event, potential, that's one outcome, is your holding in Entreé Resources, in my view. So it seems to me like this is coming to a close there, where a deal with the government, a fiscal stability agreement with, or sort of a essentially agreement to revenue sharing with the government and with Rio Tinto sort of has to take place, because Rio Tinto is essentially developing all the way up to Hugo North. And to my understanding, it's sort of a case of big, complicated organizations, i.e., the Mongolian government and Rio Tinto, having difficulty making decisions due to the incentive structure in both organizations, where one individual might make a decision and he would be blamed for it. It's not incentivized to get it done. But at this point, it cannot be deferred any longer, because, as we know, it's significant for the Mongolian government's GDP, and of course also for Rio Tinto shareholders to a large extent. So, what's your synopsis on the situation? What do you think? What's your expectation on timeline? And then, what do you think is the base case in terms of how this plays out from a monetary standpoint for Horizon?
All good questions, all speculation in terms of what I would have to add. But I think it's fair to assume that with large organizations, it takes a while for the key decision makers to decide and move forward. And sometimes it comes at the last minute, I think, in some entities. I take Rio Tinto at their face value in terms of them saying that they're going into development ore later this year. I think people believe that, and so I think hopefully that'll be an impetus to move that negotiation with Entreé forward, and provide further clarity on the JV. And I think the elections in Mongolia over the last, I guess, few months have finalized. And so you've got a government in place that's been elected, and they are able to make decisions moving forward, and working with Rio and Entreé and moving that asset forward.
So I guess, to my understanding, I mean, you could see a lot of variations on how this is. How this creates value for Entree shareholders, and consequently you guys as well. Either it could be sold in some kind of package. Maybe it's sold to a consortium of royalty companies. Maybe it's sold to one big royalty company if it's structured as a royalty. Maybe it's just kept and it's a cash flow machine, and then you guys will be paid dividends, hopefully. But could you outline what permutations you could see, and then which ones you would be advocating for as the largest individual shareholder of Entree in the boardroom?
Yeah, I would be advocating for clarity on the JV agreement. I think clarity is valuable for all shareholders involved, including Horizon itself. I think that Oyo Tolgoi is just a unique asset, and when it starts cash flowing, it'll cash flow for many years to come. And it's very hard to find those quality assets. And so Horizon shareholders, our position, and I think our best interests are to ensure that we retain our interest in that asset. And so there are different permutations you can look at. I think people kind of use like a chessboard or checkboard, depending on who it is, in figuring out those different permutations. But our goal at the end of the day is to maintain our exposure to that asset.
So that means that you do not want to be involved with selling to potentially, royalty companies or any other structure. You would like to maintain exposure to cash flows going forward.
Yeah, our primary concern is maintaining our interest in that asset, and so I'm not looking towards to sell to, whether it's the other major shareholder or other shareholders who want to buy our position. Um,
Yeah.
Look, we're very industrious people, and we'll look at certainly offers and see if there's something that's makes sense. But I think when you compare, what people think that asset is worth today to what it will be when it's actually cash flowing, and commodity prices, depending on which commodity price you use, I think the value there unlocked on a world-class asset like that can be tremendous.
But it seems to me that a conversion from having an sort of indirect equity exposure, which you have currently, to it actually being a royalty, that would be the most attractive thing. If you continue to be large shareholders within Entree, that's sort of they can deploy that capital. I mean, of course, you have a big say on how it's going to be deployed, but it's still kind of it's not the most direct thing. It will be a lot more lovely, I think, to just have that as a royalty, convert it to a royalty or a stream or whatever, some kind of direct where you get the cash flows directly to yourselves. And that could happen if it's packaged as a royalty. Maybe you convert your equity portion into a fourth of that royalty that might be sold, or something like this. Is that something you could see happening?
I'm a big believer in having clarity within assets that you own. So if
Mm.
Entree is able to do something and they go pursue that path and they're able to execute on, their negotiations on the JV and they get something that's a better quality, absolutely, I think that's a benefit for all shareholders, and I think Horizon shareholders would like that as well. Certainly, we'll look at it when it makes sense, and once management at Entree put out press releases on, how their progress is going with the arbitration and all the other stuff they're doing in the background. We'll take a look at it, make a determination. But certainly, I think that we want to ensure that we have our interest in that asset going forward.
It totally makes sense. And can you just remind everyone who might have forgotten since last, but what does it actually mean once this is fully ramped up into production? What's the range of meaning for in terms of cash flows to Horizon once this is up and mining?
Yeah, well, it's cash flow that is, I think, very unique in duration. So often you look at your cash flow and you go, okay, what's your attributable amount? Is it, depending on what prices you use, is it 15 million US? Is it 20 million US? I think what's key for this asset is even when you kind of look at the averages, it's just so many years of cash flow coming to our shareholders. And when you look in the context of our entire portfolio, we're cash flowing today with respect to Antamina, let's pick whichever commodity prices you want, but on average about 10 plus million US a year. And then when you look at when our assets are cash flowing like Oyo Tolgoi, towards the end of the decade, you're in a scenario where you're cash flowing your market cap and beyond on an annual basis. And I think this shows you the kind of like strength of the cash flows and the torque coming from our investments. And Oyo Tolgoi is a key component of that.
So when you're saying so just people who might not know your current market cap, if you just break it up and put it into an actual figure,
Yeah,
and
our market
what price
cap's
assumptions
about
are you using
40,
then?
50 million US, and our enterprise value is close to $250 million US. And that delta is leverage that we have with our strategic partner Sandstorm on notes that
Yeah.
aren't owed for another decade.
And as we know, I mean, yeah, exactly. So it's very very attractive leverage, of course. Um, Almost like a
Yeah, very
sheet cover.
torqued, but I would, for people who don't know the story, I think leverage can be a scary thing, but the way we structured this is the notes aren't due for another decade, no financial covenants, the interest rates are quite low, negative yield, and so it's not onerous terms by any stretch.
No, and we did cover this quite extensively in our last videos. I think people can go back and take a look at that where we have a segment where we speak about this more extensively. And yes, I do agree. It's a very envious position for a small market cap royalty company at least to be in. I can't think of any other company that has the same situation as you guys in that regard. So yeah, I mean that's very interesting with Entree, and I think we could expect something before year end there. I'll say it myself in terms of an arbitration decision or an update on it at least significant from Entree, and I guess we'll have to speak again once that happens. And so if you just put, I mean, kind of one last question before we leave the topic on Oyo Tolgoi and Hugo North. What would you value the asset at? So say if you were in Entreé's position, you wanted to sell the asset to someone. Uh, are we talking 400, 600 million US, or what do you think would be a realistic
I have my
cheap
own
question?
number in my mind of what I think that asset will be worth in the long run, and
Yeah.
I think it's an asset that's world class. And to qualify as world class, it means it needs to be in its own rare category, and
Mm.
as a result, it needs its own valuation metrics associated with asset that can cash flow for decades. I think that
Yeah.
whatever number you say and other people say, it's going to be a lot different in a decade. That's my those
Yeah.
are
I
my
mean,
thoughts.
it's the old thing, and we've had this discussion with all of the royalty companies we speak with. Is a devaluation philosophy, because if you just do a DCF with these generational, truly generational assets, especially within a streaming slash royalty company, it you miss a lot if you just do a DCF, obviously, because beyond year 11, 12, 13, then it's just essentially zero. So yeah, it's a fair point, and based on that, you're willing to pay a premium. But yeah, it's clear you want to maintain the exposure. I think that completely makes sense. So it's good to hear. So, but let's speak about Antamina. And we spoke with uh, with David Erfam, David over at Sandstorm as well about this. And I think it would be good to hear from your point of view as well, because they released a modified EIA. To my understanding, you weren't expecting to see comments about potentially increasing throughput there as well. So could you give your interpretation to that and what that might mean for Horizon should that come into fruition, and kind of a hypothetical timeline if that ends up happening?
This is a great example of the difference between really quality assets and those that aren't as high quality. When we did the transaction, we weren't out there talking about throughput expansions or the possibility of throughput expansions. While other assets out there, you have to talk about throughput expansions. You have to explain that there's a possibility of it because the economics don't necessarily make sense, the returns don't make sense. But when you associate yourself with really high quality assets, things like getting permit approvals for increased throughput expansion of 30 to 40%, you know it's just part of the nature of maximizing a high quality world class asset. And so that's why you're today looking at it and be like, hey, you didn't mention anything a year or so ago when you got the asset, but today you got approvals in your modified EIA for the possibility of doing a throughput expansion. And so that's something that I think is important when you associate yourself with great quality assets. These things come to fruition. On the throughput, they modified their EIA, certainly, where they could increase their throughput. Now, we'll see. Now, I think they're good planners. They think of the long term, so they're looking at different cases. And so it's not something we expect to happen immediately, certainly, or in the next year or so. But the fact that they're thinking about it, getting the permits in place, thinking about the long term of how they can move forward and actually expend capital to increase that throughput, if they're able to execute on that, that's just additional cash flow to Horizon shareholders, which would be fantastic.
Right. So could you? I guess it's difficult to do. I guess, but what do you think would have to happen for them to move forward? That do they have to do more delineation of drilling? I mean, the resource and reserve is huge already. So, what do you think are the actual steps you would have to see for them to potentially move forward with that?
Yeah, I
Higher
think
prices.
I think if you're in the room with them and you're sitting down with their technical team and board, they probably have some thoughts that they will be happy to share as time goes forward. But for the time being, I think they're working in the background, considering what are their plans for the mine, not only the next 5, 10 years, but over the next several decades. And so those are all part of a systematic plan where they look to optimize the ore body and make returns for their shareholders. So that's, I think, their mindset, and that throughput expansion is just one of those things that they would look at beyond, your traditional, optimization of the pit, exploration, etc.
Point being, good assets, good teams should surprise to the upside more than not. So, and that's we're seeing the potential for that here. Just a reminder of what's the kind of annual current cash flow contribution from Antamina at the current copper and gold and silver price.
Yeah, they tend to be chunky cash flows, as we've told shareholders before. Some years they're a little bit higher or lower depending on working capital changes. But our estimation is, be 10 plus million US average annual basis based on spot prices. Sometimes when copper runs, that asset net of the streams and royalties of Sandstorm would have cash flowed over $20 million US. But that's dependent on a number of different factors. But I think the expectation isn't so much what is the cash flow going to be, this quarter or next quarter. Is these are cash flows that'll happen over, what we believe many years. And you saw the mine life extended to 2036 in the last year alone. And so just a cornerstone cash flowing asset that provides a lot of torque and leverage to Horizon shareholders.
Yeah, I mean, and when you have a huge operation like this, I mean, if you truly believe in a higher period, say the next 5 to 10 years of high elevated, especially copper prices, then an expansion becomes very likely probably at that point, and then you're really talking even further inbuilt torque for Horizon. So yeah, it's a really an excellent option to see potentially materializing in the
Yeah, one
future.
of the things that I quite enjoy is if we were just a regular mining company that just had one asset like Antamina, it would consume all our resources, all our time. The benefit, I think, the way we've structured it is we have the best mining minds in the world working on Antamina today without a cost to us. There's no cash calls associated with it. And we just get a check on a quarterly basis. And so you don't have to worry as much on the day-to-day operations, and you get to look back on the bigger picture of what's happening in Antamina. What is their long-term mine life? What is, these EIAs are getting approved, and you can focus on adding more assets to the portfolio and maturing your portfolio as a whole. And so that's the beauty of, I think, what we have in our company today.
Yeah, it is a really interesting business model, and of course, it allows you to have a extremely slim cost structure, also enabled by the cooperation with Sandstorm. So yes, I think this kind of covers your your three main assets here. So I guess we could kind of get over to more of a general conversation briefly. If you look out in the market right now, what are you seeing out there? I mean, are there any available opportunities? In what sort of stages do they tend to be where you're seeing most potential? And as we established, likelihood of making a larger transaction is almost it's very small. But is there something you potentially consider and could consider, and what are the likely quantums that will be involved if you trigger on something, say, the next 12 months?
Yeah, we have some in our pipeline that we're looking at that are maybe potentially a little bit larger, but we'd have to get comfortable from a technical due diligence perspective. But I think the execution of those transactions are not probable currently, based on what I'm seeing. Certainly over the next few months, I don't see that happening. But I would kind of clarify the two buckets. One bucket is large transactions where we're going to allocate capital to assets that are, cash flowing or very
Yeah.
near term cash flowing. And then you got another bucket where you can put a small amount of capital where you're building out your portfolio, that that you like the team, the prospectivity of the project is good. It doesn't require any additional large capital outlay in the near term, and you can build kind of that optionality in the portfolio. You may see us announce some of those over the course of time, but our focus is largely on those two kind of strategies: allocating capital, large amounts to cash flowing assets or near term, and very small amounts to more optionality assets.
Okay. I think that's quite clear to me. So it sounds like if it has it cannot be. It sounds like a financing a late stage development project, sort of build finance, is quite unlikely. It has to be leveraged based on existing cash flows, most likely to be a larger transaction.
Yeah, the simple math of it is when you acquire an asset and you want to finance it, it's a lot easier to have financing capacity if it's cash flowing today. That's just the general nature of it.
Yeah, yeah.
Whether it's that That's usually how it works. Other questions pop up of offtake agreements. Are those available? That's other ways you can finance it as well. And certainly streams and royalties on the precious metal that Sandstorm has a right of first refusal on. If we go down that path, that's another route that we can take. But for the time being, I think we're happy with what our portfolio is doing in terms of Antamina, their mine life extension, their EIA. We're excited to see what happens with Oyo Tolgoi, the drill results that are coming out of that,
Yeah.
movement and acceleration on what's happening with the development ore later this year, and more news coming out of it. And then Hod Maden, while we're disappointed that it's being delayed as a result of what's happened at the operator's other asset, we consider it more of a timing issue than anything indicative of the quality of the asset or any of those other kind of components. So we're pretty excited. And in the meantime, you can optimize it, continue the early construction works that are required to move that asset forward. And it's allowed us to put a revolving credit facility in place at reasonable cost of capital that wouldn't be available to most junior copper companies, certainly. And in the meantime, we're looking for good assets to add into the portfolio if that makes sense.
It does, and I think that's a neat summary to end on. So I think we'll be back next time. Hopefully, we're able to speak about the arbitration decision and potentially a smaller or some type of acquisition or something like this in 3 to 6 months from now.
Thank you very much, Gorm.